Hey, this is Ali from FX Order Flow channel, and in this video I'm going to show you guys how I made a trade on Liquidity Grab with the risk reward ratio of 5. And if you're familiar with my YouTube content, you know that most of my trades have the risk reward ratio of at least 3, sometimes even goes even higher than 8 or 10. So make sure to follow my channel and check my content to know how I do it. So I took a trade on S&P 500. I'm going to show you guys on hourly, the location on hourly. So I took the trade over here, almost here. And after the all-time high here, I trade my stop loss and got out somewhere around here. I gave it some room to go higher, but market came back. So it hit my stop loss. I was trading it somewhere around here, and overall I had like 41 to 42 pips of profit with a 8 pip stop loss. I entered here. I'm going to show you guys at the end of the video on CFD, and my stop loss was somewhere around here, around 8 pips. It was like 8 pips. So overall I had like the risk reward ratio was 5, a little bit higher than 5, but we rounded up to 5. And eventually market even went higher if I would keep it. But recently, after all-time highs, we don't move that much. But the reason for this movement was earnings. I didn't know is that the earnings would be good or bad. That's why I don't take risks. I always trade my stop loss. If it moves, it moves. If it's not, the 5 risk reward ratio is already good enough for me to exit my trade. So I give it a little bit of room just in case if we push like hard from all-time highs. But if we don't, I always trade it hard right after all-time high. We had an all-time high on this candle, and then we dropped a little bit. Then we had another all-time high with the high of this candle. Then we dropped really hard, and then we went up. Okay. So why I call it liquidity grabs. So every high and low in the market has liquidity. For example, for this high, we have some liquidity here. For this low, we have liquidity. For this low, we have liquidity. And the only way that you know that market is actually opening orders by stop losses down here and grabbing the liquidity is to watch order flow in 1 minute. You have to see the market when it's filling their orders in lower time frames to know that they are actually planning to move the market up. Okay. And usually like 95% of the time, it only works in the direction of trend. For example, if we are buying, if we are in a bullish trend, you have to look for lows, especially lows with cycles. Like I want to show you a cycle. Recently we didn't have much cycle, so yeah, unfortunately recently we didn't have cycle, but I talked about cycles in one of my videos. I'll put the link in the description. So let's check that how we can know that the market actually is grabbing liquidity. But before that, we also had a value area here for 2 days ago, and for 3 days ago we also had untested value area. So other than liquidity grab, we also had 2 important areas here. If you don't know what is value area, I'll put a link in the description. I already explained it in my channel, so make sure to check that video if you want to know how this value area works and what exactly it is. So let's jump to 1 minute. This is the exact location in the hourly chart that I show you guys. If you look here. So right after, this is the low, hourly low is getting hit exactly on this candle. Now let's see what happened here. Okay, this is 1 minute, and these numbers are volumes, and these blue ones are blocks of sell. Obviously the delta is on the bottom of the candles. negative deltoids on the bottom and positive deltoids on the top. So basically with level 2 data, I already explained that in my YouTube videos, we can see exactly that in every takeoff price, how much buys and sales are getting filled. So with the help of level 2, we will know that, okay, this is not a normal low here. Something is really happening here. So ever since we're like going down, getting closer to the low, look at those sell orders. It's increasing rapidly. Look at the delta line. It's going hard really, really fast. So we had some absorptions here and also here, but after these absorptions, the market rejected and closed above the volumes. Okay. So obviously we're looking for a passive buyer that planting buy limits on the stop losses here, down here. So when the stop loss is getting hit, it's like sell orders. Because when you buy, you put a stop loss a little bit lower or even 100 pips lower. And then when the market hits your stop loss, you're actually selling because you bought earlier. So now you have to sell to close your position. So basically the stop loss orders are here, and the market, the passive buyer was keep planting the buy limits on the stop losses. So they filled a lot of orders down here. Just look at this, the last two candles. Okay, 6,500, almost 6,500 of buys, 6,300, 7,900, almost 8,000, 7,700 of sales. So overall, it's a lot of volumes for just 2 minutes of the market. So let's see what happens next. Right after that, a massive amount of buyers just entered the game. So when I see these strong absorptions in the market, and we also have area, we also have a fishing, which is liquidity grab. I call it fishing. When you see the buyers enter the game like this is strong, it means that they already filled most of their orders, so they want to push the market up. But the delta was really negative after like this last few candles. So I was worried and I didn't enter right away. I waited for a retest to see the market reaction after retesting this block. So we had a retest here. The first candle had negative delta, closed inside, so I didn't enter. But the second candle, once we retested inside this block, close to these volumes, we rejected. And also delta was positive. It wasn't a lot, but it was positive. But at the moment when the market retested, a lot of buyers came in. But then at the end of the candle, some sellers came inside and lowered the delta. It was actually much higher than 60. It was like 300, 400. So once I saw that reaction, I entered somewhere around here. So it was my entry point, and my stop loss was here. So around 8 pips. It was something around 8 pips. It was not more than 8 pips. So after that, again, sellers pushed and unfortunately pushed, and I was in drawdown. And once we retested here, again, we had absorptions here, sell absorptions, and the market closed above it. So I saw that and I said, okay, we're good to go. And then right after, buyers entered. So we were keep buying after that. And as you can see, the market went up really good. We had some absorptions over here. After that, oh, and by the way, I closed 50% of my position on 1-to-1 risk-reward ratio around here. And I kept the rest. Market was ranging here for a long time. We had some absorptions. Came down again. We had absorptions down here. They kept the market from falling more, and then eventually went up. And for the next day, I kept my trade for the next day, and this is market close. This is the next day, and before market open, I trailed it. Let me show you guys where. So this is what, still 1 minute. So after we had on this candle, we had the new all-time high. It wasn't that much, but we had it. So I trailed it somewhere below that because I had an area. traded over there, but unfortunately the market dropped and got me out with this candle, and again dropped harder later on when the market opened, dropped harder down, and eventually went up. This is the same trade on CFD market. As I said, I entered here, my stop loss was down here, I closed 50% here, and eventually when we had the all-time highs here, I traded my stop loss around here and got hit, then the market came down, and then eventually it went up. So it was my overall trade. I made a good profit over there. And yeah, if you like the content and it was useful for you, don't forget to like and subscribe. See you guys on the next video.